U.S. real estate stocks sold off sharply on January 7th, not because of interest rates or inflation, but because of a political headline. In a message on Truth Social, Trump said he wants to ban large institutional investors from buying more single-family homes, and he's urging Congress to make it law. Markets reacted fast. Blackstone, the world's largest real estate investment manager, suffered its biggest one-day drop in nearly 9 months. Single-family rental companies were hit even harder. American Homes for Rent briefly logged its worst day in almost 5 years, while Invitation Homes slid to its lowest level since 2020 before closing down about 6%. So why did this rattle Wall Street, and what happens next? Institutional investors have become a visible player in the U.S. housing market. Their model is simple. Buy homes, flip them, turn them into rentals, and profit from rising rents and long-term value. But a ban on future purchases threatens that growth story. Fewer acquisitions, slower expansion, and potentially lower returns. That's the risk that traders rush to price in. But zoom out, and the picture looks very different. Large institutional investors only own less than roughly 1% of U.S. single-family housing stock. That's according to SFR Analytics. Housing analysts say targeting them may do little to fix affordability. The bigger drivers remain years of underbuilding, restrictive zoning, and higher construction and financing costs. Which brings us to the real question markets are now asking. Can this idea really become law? If it stalls in Congress, the sell-off may be overdone. But if it gains traction, demand could simply shift to smaller investors, owner-occupiers, or other corners of the market rather than meaningfully cooling prices. Either way, the reaction shows just how sensitive Wall Street is to housing policy headlines and how quickly political risk can spill into markets.